Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved with trading. Each trade that you take, there's no guarantee of profits. So you want to manage risk in a way that makes sense for you in terms of trade size and maybe using stop loss settings or AvaProtect in one way or another to manage risk based on your preferences and risk tolerance. And keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. And there's some nice risk management features that we'll make use of within the session if there are any trades that we simulate. You'll see in the order window some nice features to help calculate exposure, potential profit, etc. Now, real quick, for anyone who's new to things, what is technical analysis? Basically, it's looking back at the price movements from the past, trying to find some advantage from what you see in the past to help you predict what might happen in the future in terms of the price movements. And there are lots of different patterns and methods that are used in looking back at those past price movements. And we go through most of those ideas manually, drawing our own lines, whether they're support and resistance lines or trend lines that go up or down. Maybe we find a ranging pattern or a breakthrough pattern, etc. And there are lots of different formations that different traders look for, and those that look important, we'll point those out within the session. And then also you can add indicators that also assist with looking back at the candles and giving you some opinion that the indicator is programmed to give you based on the past prices as well, whether those indicators are looking for an overbought location or an oversold location, trying to signal you when to buy or when to sell, and different indicators show that with different visual representations. But basically, they're doing the same thing that you do manually, looking back at the candles and deciding based on the past movements when it might be opportunistic to buy or sell. And so we'll go through some ideas in terms of the technical strategies, and obviously you also want to keep in mind the fundamentals of the situation as well, which we'll talk a little bit about as we get started. If you have any questions, you want to give any input, feel free to do so within the chat box at any time, and I'll try and keep up with any questions or comments that come up as we go along. So from our main website, you're able to log into our web trader in the upper right corner here, which allows you to trade on the MT4 accounts and the MT5 accounts from one location. And the advantage is also that you have advanced functionalities with free signals, market news, etc., that you don't find in the MetaTrader platforms themselves. So even though you all have MetaTrader accounts, you can trade on those from our web trader and our AvaTrade Go app with the advanced functionalities. And if you're using robots, that sort of thing, you can still make use of the MetaTrader platforms that we also provide as well. So if we log in here to the web trader, then what we can do is start to look at some technical signals maybe that come from Trading Central. And this signal service usually requires traders to pay for these signals from Trading Central, but we provide them for free on all of the live accounts. And so before we take a look at some of the signals, we probably should talk a little bit about the fundamental news to get an idea of what direction we might think it makes sense to trade before we see the signal. That way you can go into the signals and maybe have an idea of which signals make sense and which ones maybe don't. So you can preferentially choose the ones that make the most sense to you based on what you know about the fundamentals as well. And I can just give you a quick, maybe 5-minute overview. You know, the big overriding story still is inflation. Is inflation coming down in different areas around the world? And largely the focus is on the inflation in the US and what effect it will have on the monetary policy out of the US. And what we've seen is that the inflation is still higher than expected. It's coming down slower than expected. And this is leading to fear on the markets that the US just won't be able to lower interest rates as soon as had been hoped by many investors. And so the fact that interest rates now are expected to stay high longer than expected, this is leading to a lot of volatility and fear on the markets today. And it's just, there was just some more data that came in today out of the US that was better than expected. That just piles on to the week prior and the week prior to that, et cetera, where CPI data, PPI data, factory production numbers, jobs numbers, et cetera, keep coming in better than expected, which you might think, well, that's good news. The economy's stronger than expected. Why does that create fear? And again, it's because there's fear that inflation is not coming down, which will cause interest rates to stay high, which causes harm to the housing industry if people can't afford home loans with the higher interest. The housing industry, the car industry, if people can't afford car loans because the interest rates are higher. Small business loans, interest rates are higher, et cetera. And that has a ripple effect through the economy, where the stock market has been doing really well. They say, Wall Street might be doing well, but Main Street is not doing well. And in the US, in particular, there's a record use of credit, overextended credit with credit cards maxed out, delinquency on payments starting to be a problem. And so people are kind of underwater in terms of their monetary situation. And so this is the fear, is that this is really eventually going to come to a head. If interest rates can't come down yet because inflation is still high, it's really starting to maybe cause a problem. The silver lining is starting to disappear with these strong economic numbers. And so this, I think, is largely where the fear came from today. We see all the major indices have pulled down. Commodities are dropping some against the US dollar. And so let's take a look. With that said, with understanding that that's the situation, the US dollar really didn't strengthen so much yet, but many times it does when there's a lot of fear. So let's see if there's some opportunistic entry points, maybe on some USD pairings, what the signals are saying, and maybe is there a bounce that happened yet on something like gold or the major indices, and we'll see where everything rests. So we could take a look, maybe GBP USD, and see what's happening there. We see the sell scenario. It's a sell signal, and it says the market already reached a key level. What they're talking about here on this signal is it tested the resistance line here and broke past it ever so slightly. So it went above the pivot line, but not by much, and it already broke back below the pivot line. So this looks like an active signal that tried to break past the pivot point going up, which would cancel out the sell signal. But in my opinion, it was unsuccessful at breaking that resistance. You see here, it really tested it, but didn't really break up to signal that you should buy towards these levels up here. So the fact that there's high fear today, high volatility, many times there's a correlation between high fear and the USD strengthening, and the fact that the fear is about the fact that maybe the US can't lower interest rates, which, lowering interest rates tends to weaken a currency. So the fact that they can't lower them yet is the fear. That maybe could have a bullish effect eventually on the USD. Okay, so the fundamentals add up to trust this signal. It says sell, it's below the pivot line, and it tested the pivot line and seems to be dropping off. So this looks like a valid sell signal on the GBP USD. The folks at Trading Central still have it listed as a sell. The fundamentals kind of fit that this might drop, and there's reason for the USD to strengthen fundamentally. So if we click on sell, we can then take a look at the smaller candles and say, okay, if this is supposed to drop, then it already tested this resistance level up here. If I get my stop loss above this resistance level, which is the pivot line in that signal, the only way I lose is if it breaks above this resistance, and I'll take a small loss. Where would I take profit? Maybe this line that I drew last week, or maybe you would go to the next support level down. You see the support, 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 support. This is a more solid support level than this one, okay, which has only been there today. This was here a longer period of time. So that looks like about a 4-to-1 or 3-to-1 ratio risk to potential profit, probably 3-to-1. So if I want my take profit, in the direction of the signal, maybe 125. Let's draw another line just above the support. Maybe 125, 4, 3. Okay, just above the support level, I'll do a take profit. So 125, 4, 3. My stop loss, we did pretty good with our simulated trades from last week. I think like 3 out of 4 paid off pretty well. Let's take a look here. We've got stop loss just above maybe 125.80. Okay, 125.79 clears all of these wicks. 125.79, that's okay. And so now I'm looking at better than 2-to-1 ratio, almost 3-to-1, potential profit to possible loss. Now all I have to do, now that I have my preferred exit points and my entry as the market price, once I have that lined up with the technical analysis and we're in the direction of the fundamental news, we hope, now we just adjust the trade size to the amount that you want to risk. If I want to risk, and I always use an example of 1% of my balance per trade, it could be something different for you. But if I'm looking for 1%, it's around 675, okay? So if I go to 3 lots, I'm risking 300. So if I go to 7 lots, I'm risking 686. That's about 1%, a hair over, to make greater than 1,800. Okay, you see how the risk management is done for you as you adjust your trade size. Now I know what my possible loss, my possible profit is, and I'm ready to go with my trade. Okay, very simple. We use the tools that are available. First, we did just a little summary about the fundamental news situation, which we could easily have used the economic calendar, looked at the market buzz to spend more time on the fundamental news and got a feel for the fact that there's a lot of fear today. And then we use the technical tools like the signal to see what do the experts at Trading Central think. They were saying sell. The fundamental news that we talked about also kind of says sell. And the entry point, when we did our own technical analysis, showed a resistance level that held and a reversal off of it, and a support level that's further away, so an opportunistic entry point to go in that direction. So that's basically a checklist that we put together that told us maybe this trade makes sense from a risk management perspective, from a fundamental perspective, and from a technical entry point perspective. And that's really how a trading strategy works. You don't just use the signal by itself. Some people do, but that's using one tool. That's not really a strategy. But when you have multiple tools, doing your own technical analysis on the chart, looking at the fundamental news, and looking at the signal, now you have multiple tools to create a strategy. Okay, and you can make the strategy your own by tweaking what it is that's on your checklist before you're comfortable to make the trade. Okay, and it doesn't mean you have to have 1,000 things on your checklist. 2 or 3 things that are important to you to help you make up your mind, like we did here. So this trade really looks like it's trying to accelerate down. We'll see what happens. If you want to check on your trades, once you've opened them, you go to the positions section. And you see this hasn't overcome the spread just yet. And what's nice about this is when you're in this section, you can adjust your stop loss and your take profit. Here you see them on the chart by simply left clicking and dragging. I can adjust my stop loss up or down, just drag it up or down. Same with the take profit, left click and drag it. You don't have to do it manually by typing the numbers. You can just drag them. So if I look and I decide later that, okay, I'm above this resistance level here with my stop loss, but maybe I want to be above this little support level here. And so I can just simply say, okay, there. Now I've got my stop loss above this old support level and above this resistance level. So it would have to break through 2 important price levels to hit my stop loss. Of course, I have to risk more to do that, but I can adjust this at any time that I want during this trade. Okay, maybe I put it back down where it was because I liked that setup, I think. So very easy to adjust your trades once they've already been opened. and obviously easy to set them up while you're opening them. Any questions, comments on what we've gone over so far? Yeah, Chris, some of the signals will show daily, or they'll show 30-minute candles in the signal, and that might cue you in as to what candles to look at initially. But I would recommend not just looking at those candles, but look at as many different time frames as you need to feel comfortable about the trade. So sometimes you get one perspective on the 30-minute candles or the 1-hour candles, but then when you switch to 1 day, 1 week, you get a different perspective. And so I recommend taking that sort of inside out look where you start on the smaller candles and work your way larger until you're comfortable with knowing enough information in the bigger picture. Or if you're starting on the larger candles, you take an outside in approach where you look at those larger candles and then work your way down to the smaller candles to zero in on your entry point more specifically. So, more information is always good. And, sometimes in my simulations, I could take the time to do that. We could have looked beyond the candles we were on, but for time's sake, sometimes I don't go for those larger perspectives if we're looking at a shorter term type trade. And I knew going into that it was a short term signal, so I didn't really take the time to look at the 1 day, 1 week. But certainly, if it was a longer term potential move, we'd be looking at those larger time frames. Oscar, you're asking if there's a way to view the level 2 information. No, we don't have what's called level 2 information on our CFDs. We do have a futures trading platform that'll be starting up within the next quarter, I believe, and it will have level 2 data coming from the exchange for the futures trading. For anyone who's not familiar with level 2, let me just open the order window. It'd be the easiest way to explain it. Level 2 would be, you don't just see one buy or sell price, you actually see the order book where you see how many people are wanting to sell at a certain price and how many people are wanting to buy at a certain price, so that you know if you sell, what type of price you might get, whether the spread might be a little wider or a little tighter. And that's important on a floating spread platform where the spread is constantly changing. On our platform, you don't need level 2 because mostly it's fixed spread. It does vary with high volatility, it can widen, etc. It does change on occasion, but 95% of the time our spreads stay the same. So you don't have to worry about level 2 and what price you'll get, because you see the price you'll get within the spread, the buy and sell price. It's not the same as when you have an order book where you know in advance you're not going to get that first price for the whole order. It's a different style of trading, and with CFDs as we have it here, it's not necessary for level 2, but on the futures trading, when we bring it, you'll see it is necessary, and it will be provided actually for free. Most places will charge for level 2 order book views, but we're going to provide that for free once we launch the Ava futures. Very good question. Okay, so let's go ahead then and take a look maybe at another instrument. We could look at something like gold, which, wow, has it been hot, climbing to all-time high after all-time high. And again, today hit another all-time high. Just a few hours ago right here was a new all-time high for gold, okay, above 2270. I think 2275 it even broke past. And so new all-time highs keep coming with gold against the US dollar, against the euro, etc. Why is that? There's a lot of fear out there about how strong will the currencies remain? Will the USD lower interest rates? If they do, that would weaken the currency and cause more inflation potentially. And so gold is a safe haven for that reason and for other reasons. There's war breaking out in multiple places around the globe. If there's fear that different economies could be hurt, the fear that maybe stock markets might pull back, etc. Gold is traditionally been a safe haven, and so that's a good measure that there is fear out there. The fact that gold continues to climb. At some point, will there be a large sustained pullback? Probably. I don't know that anyone could guess the exact price that would happen, and really it's not so much based on the price, but based on what fundamentally needs to change for gold to stop being so bullish, right? And I think if the fear of inflation starts to drop, that could be coincided with the U.S. deciding inflation dropped enough to lower their interest rates. While that would weaken the USD, it also is a sign that there's less fear about inflation. So those things maybe could correlate at some time as well with fears about inflation dropping and maybe gold slowing down or reversing this large climb that it's at. Currently, there's a lot of fear again today. If the USD starts to strengthen, that could work against gold climbing. So far, it hasn't, because the USD, with all the fear that's out there, wasn't strengthening so much, and gold was having a heyday here today. But we see the pullback. Okay, there's been quite a pullback on gold here, and let's see what the signal is from Trading Central. It's still a buy, but the fact is it already hit their take profit zone. So if you looked at this a few hours back, the signal was telling you to buy when the movement was down here, and we see it already went up and hit the first take profit suggestion. So this was another successful signal from Trading Central, and then we see the pullback. So you could view this as an opportunistic spot if you think it will continue to climb, because it pulled back to the entry price from a few hours back before it had hit the take profit line. So maybe it does that again. I seem to think that the USD looks to be strengthening a bit now after not doing so through the early part of the day. So, the momentum on this may have died down a bit. And the fact that it hit the take profit, it's kind of a signal that already came to fruition. And maybe you say, okay, next time, maybe I look a little earlier in the day, because a lot of these signals come out when the news is first breaking on the day. And if you wait till now to look at some of these signals, a lot of times you see exactly this. It already came to fruition, hit the take profit, and even pulled back since then. Okay, but if you're still bullish on gold, that's an opportunistic entry point to try and go after these take profit prices maybe one more time. Okay, what else can we look at? The equities really got hit hard today. We see the US 500, a large drop down. Okay, we see these are support levels I drew from last week. Support, 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 and here's today just blowing through that support level. And in classic fashion, this is why you put pending orders below support levels to sell. Okay, had you put a pending order down here, here's the support level. If you put your pending order right down here below the support level, as soon as it broke the support, that's a sign of downward momentum. Your pending order would have sold if you had a sell pending order below the support level from last week. And you put those pending orders like trip lines in the market to say, okay, if indeed that support level breaks next week, and that would have been last week you're saying that, or maybe yesterday, right? This is Monday, actually, this support level. And last week it was falling towards there. So Monday we had a support level, and this morning, and then as the day got going, the support level broke, okay? And so what we're looking at then is a pending order would have triggered here, and this huge plunge, as many times happens after a support level breaks, it breaks because there's a momentum, and so then the momentum continued and found a little bit of support down here. So here's the spot where you think about taking profit on that pending order sell had you had it there, okay? The short-term move would be take profit once it establishes a new support level, okay? Now the question is, will it break the next support level? And you can do the same thing. You don't have to sell now. If you think it could keep dropping, but you're not sure if it will, let's go to larger candles, okay? And we see here's where it found support today. You could say, all right, so why did it bounce from here? Well, look over here. It's obvious. This was an old support from last week. Support, 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 right? And then went up. So it makes sense as we come across to today's drop. That's where, when it hit that price, the buyers came in. Because the last time it was at this price, it held and went up. So once it got to this price, the buyers came in and bounced the price up. It doesn't mean that that upward bounce will continue. But a lot of opportunistic traders wait for these key price levels and say, okay, I have pending order on this support level. If it does drop, I'll buy from that. And boom, it hits that price and their pending orders kick in and up goes the market. Okay, but these are a lot of times scalpers, meaning, yeah, they bought here and it bounced up, but as soon as it gets near the next resistance level up here, okay, here's the old support. So as it gets close to the resistance, they likely will sell if they're quick in and quick out. Okay, so the question is, will the momentum come back and keep dropping? And you could do the same thing you could have done below this support level. You can put a pending order below the today's support level that it just formed. So if it breaks below today's low to here, have a pending order to sell, and you put your take profit before the next support level, which might be down here. Okay, it's like a staircase. One step down, one step down, one step down, and will it break the next step and drop to the next one? Perhaps, but you don't have to guess whether it'll break. That's the idea of the pending order. You put it below the support level. If it breaks the support, like it did here, you hope that it has momentum then to continue dropping. Sometimes it'll break, trigger your trade, and go back up. You take a small loss then. Okay? If you're entering from below the support, assuming it breaks, then you get your stop loss somewhere back above that broken support. And if it goes back up, then it was a false breakthrough. And you can take a small loss. You don't have to stick with it if it reverses and then goes the wrong way. But if you look at what happened today or this week, it broke one support. Your pending order would have paid off. It broke another support. Your pending order would have paid off. That's 2 in a row this week. If it breaks this support, maybe it pays off. Maybe this is the one that loses. But if you try it enough times and you can win 1, 2 out of 3, let's say, that's a nice strategy. It's a nice profit. And many, many times when the support levels break, there's momentum afterwards with continued dropping. Support level forms, it breaks again, momentum. Support level forms, will it break again? Maybe, perhaps also with momentum again. Okay, this is the value of technical analysis to see where those important price levels are, where you might expect buyers to come in to produce a bounce, and where if it breaks through, you might get sellers who have pending orders like you could do to push it down further. Okay, that's where the momentum comes. Buyers and sellers at key price levels. And those people who are looking at those key price levels are looking at it very much the same as we are right now. So you can almost with good accuracy predict at least the general location where bounces like this might occur. This didn't happen by accident from this location. It bounced from here because last week there was support right there. So traders were waiting for that price to buy from. Why did this surge when it broke this price and dropped further? Because it was a support level, and the momentum that broke the support convinced traders that's a spot to sell. Okay, it becomes pretty simple to read what's happening and get into the minds of traders on the global market when you start to look and analyze these price levels and understand why they exist and why these patterns occur the way they do. Okay, it's the psychology of traders causing these support and resistance levels and the patterns that you see when those prices break. Okay, any questions, comments? Okay, so this is a good place maybe to stop. We've been going for a good 30 minutes. Any last questions, comments, or maybe one more instrument that someone would like to see? I'll take the first one that pops up. Natural gas, okay. So, you're asking, is natural gas on the rise? In general, we're headed towards summer. Tends to be less demand for natural gas in the summer. Well, let's see. In the short term, it looks like a bounce happening. If we go larger candles, 1 day. Okay, you have to look and see it broke a resistance level here. Okay, on the 1 day candles, this was resistance, resistance. It broke this week above and today above that resistance. So you look and you say, okay, where's the next resistance level? And really it's here. It's at the next resistance level. It wasn't far away. We see this was a support level on the 1 day candles, support, support, support. It broke below that price and became resistance on the 1 day candles. Okay, so that little support and resistance here is affecting the movement here. It's exactly where the price is now if you follow it across at this little support and resistance level from back in February. Okay, so the question is, do you think this would have enough momentum now to continue to break more resistance levels? Okay, it's reached an old support, which is acting as resistance. We see the resistance forming, and we also understand there's maybe reason for the USD to strengthen right now. Less likelihood in traders' minds right now that rate cuts can occur anytime soon in the US, so the USD appears to be poised to try and strengthen a bit, fundamentally speaking. Okay, so what do I see here technically? I see a resistance level. I see a reversal happening on the smaller candles. And I see that if this does reverse, we might easily reach today's low down here. It was just down here earlier today. Okay, so if this is going to reverse, this could be a target price down here for intraday trading. 1.785 maybe. And so if we set that up, natural gas, sell, take profit 1.785. If this is if you're expecting the USD to strengthen. I think it's possible with all the fear that's out there. It didn't strengthen initially, so maybe there's a delayed strengthening coming. If you don't think so, then you don't make this move, right? So potential profit 8,200. Stop loss, I would get above today's high, would make sense. If it breaks above today's high, then maybe we accept that we're wrong on this move. So 1.8, maybe 89 or 1.90 for the stop loss to get above today's high. Okay, so risking 3,200 to make 8,200. So the technical analysis gets me an opportunistic potential take profit compared to risk. Now I just need to adjust my trade size. So if I do, 3 lots, I'm risking 930. So maybe 2.25 lots might get me around my 1%. 2.1. Okay, it's about 1% of my balance. Okay, 672. Again, you can risk whatever percent of your balance makes sense on a move to you, but at least know as you're going into it, what's your risk and reward. I'm going after a profit 10 times larger than my risk. Okay, so that's in action. I only need to be right once out of 10 tries to make a small profit on a move like this. Okay, now you can have a take profit closer. You don't have to have it 10 times the distance. I could put my take profit here if I wanted to at the first support level, and then it's a more equal ratio of potential profit to risk. But I see a possible shot at a nice return with very little risk if it just drops to the low that it was at earlier today. Okay, so low risk, high reward doesn't mean it will win, but from a technical perspective, it's a very opportunistic entry point with a resistance level. And this goes back to that question, do you look at the larger candles too? We looked at the 1 day candles and we realized that not only is there a resistance that formed here on the 15-minute candles, but on the 1 day candles, we saw it's an old support and resistance level from weeks and months ago. So that then gives you more confidence that this is a pretty strong resistance level. It would take quite a bit of momentum to break. Okay, doesn't mean it won't, but that can play into how much you trust that resistance level. If it's only on the 15-minute candles, or that price happens to line up with the resistance level on the 1 day candles, then you start to give maybe more respect to that price level. Okay, all right, everybody, thank you for joining. I appreciate the questions and the participation. It's helpful not just for you, but for others who might not think to ask that question, but the answer is still helpful for them. So thank you for that. And good luck with your trading the rest of the evening and as you go through the rest of the week. Bye for now.